All right. We are ready to get started. Really excited to see so many people popping in. I am super excited to invite our guest speakers today. We have had a massive shift toward digital platforms, and today we're excited to have Miles Paschini joining us from FE Bank and Daniel Hinton from sFOX to discuss the role of cryptocurrencies in digital banking. Miles, welcome. Can you please share us a little bit more about your role at FE Bank, as well as what FE Bank stands for? And then Daniel, if you can introduce yourself after as well.
Yeah, well, first, thanks for inviting me to the show today. I'm the co-founder and CEO of FE Bank. And sometimes it helps to describe what FE stands for. A lot of people ask us, what does the FE mean? And it stands for FinTech Ventures. And FE Bank was really created out of the need, as many, good businesses are created out of need. And being a FinTech creator most of my career, we really realized that over time, if you are creating new and innovative products, you need banking partners, and then you need those banking partners to be aligned philosophically from a compliance and risk perspective with what you're trying to build. And so when we started FE Bank, the concept was that we would create a bank that's rooted in the proper licenses, the proper compliance foundation, and the proper technology, so that FinTech companies, and now to a great extent, blockchain companies, have a great partner to work with. And that's really what FE Bank's all about.
Awesome. Excited to have you. And Daniel.
Yeah, that's great. Thank you very much, Sarah. Yeah, I'm really happy to be here with you, Miles. Well, you bring up a good point on the need. Thinking back to our founder story, so our two co-founders, asked the question, what's the price of Bitcoin back in 2014? And the answer was it varies a lot depending on where you look, especially in the market back in those days. Multiple percent differences between that, and that's where sFOX got its start. Was thinking about being the first U.S. crypto native prime broker. Right. So we aggregate liquidity from across the global market, across exchanges, OTCs, and give our clients, a single access point to the market, a single counterparty, a single workflow to make the experience of accessing digital assets and utilizing them really simple. So my role at the company is I head up the operations and finance department, and yeah, really excited for the discussion we're going to have today, Sarah.
Awesome. Thank you. The payments landscape is currently undergoing an intense digital-led transformation. Today, we will be discussing key trends shaping digital banking, as well as collaborative opportunities between digital banking and prime brokerages for seamless digital asset services. As a reminder, we will have time towards the end of this session for Q&A, so please feel free during the session to submit your questions, and we will do our best to get all of them answered. And with that, I will kick us off. As we have seen in the last couple of months, it's very important to know what to look for when choosing a bank. Miles, what are you seeing as the biggest demands for clients recently? How have those clients' needs changed from previous asks?
That's a great question. I think the most basic of needs is really prevalent in the market right now. You have a demand that is relatively persistent in the industry, and a supply that has shrunk due to the failures of some of the banks who are participating in the fintech and blockchain space. And so, while we categorize customers in different groups, some of our customers have the most basic of banking needs. So operational payments, payroll, rent, paying legal fees, taxes, those types of things. Which, they seem very basic, but if you don't have a bank account, they become very important. And then we have customers that have more complex needs, and we try to serve, those clients as well. That can include, crypto exchanges, OTC desks, funds, family offices, and they all have different types of needs. But I would say, the biggest issue in the market right now is really just the disproportionate ratio between demand and supply. I also think there's, a lot more consciousness now about who are your banking partners, how do those banks operate their business. One thing that separates FB Bank from others in the space is that because we were born into this space with a specific mission to serve this market, we knew that deposits were very fluid from day one. And as such, we don't lend as a bank. We're what's considered a 100% reserve bank. So we hold all of client deposits either in cash or short-term securities. And that really makes us, very resilient against drawdowns or run on banks, as someone would say. In fact, after the Silicon Valley and others started to have issues, we had a day where we had a run of about 30% of deposits in a single day, which is really unprecedented. Most banks would have failed. We didn't miss a beat. We were able to have liquidity on demand. And so I think one thing is understanding is the bank that you're working with, how are they geared towards liquidity? And we're purpose built. So we're really designed to handle liquidity demands where other banks that might be getting into the space, they may be more traditional banks that run a fractional reserve banking system, which is, works for many banks based on their business model. But if you have a section of your deposit portfolio that's highly liquid or highly, high velocity, then you should segment that portion of your deposit base and treat your treasury and your capital and liquidity management differently, as we do.
Yeah, no, that's certainly something that does differentiate FE Bank and how you're operating. I'm curious, Daniel, from your perspective, working at a prime brokerage, what are institutional clients looking for when evaluating a bank in this current environment? What have you seen?
Yeah, sir, it's a great question. I'll echo a little bit of what Miles said. I mean, first of all, when you think about the crypto markets, historically they've been a little opaque sometimes, and some of the offshore exchanges you might be dealing with, you might not really know who they are or what they stand for, or even what business they are in, right? So that's kind of first and foremost, is knowing who you're dealing with, being able to put a face with the name, having people's phone numbers and emails, and being able to get them when you need to talk to them. We really see that as a key, just that personal relationship, and we really focus on that as well, as everyone knows. Ease of access is a huge thing that we see. The way that our clients, a large majority of our clients access our services through an API only model, right? We obviously have a really user-friendly UI that people can access, but the more sophisticated clients by and large are doing things via API, right? So just from the way that you're going to access the market, having a simple workflow, a single API that you can work with, and then from a capital efficiency standpoint, having a really streamlined settlement process to where your clients and your trading needs can be met in a really efficient way. That's something we've seen a lot of people be interested in, and luckily, the way that we're structured here at sFOX, we're very well suited to meet all those needs.
Yeah, that's awesome. I know that that's something that making it easy is probably in line with compliance and things like that as well, which leads me to my next question for Miles. As a U.S. licensed bank, what is FE Bank focused on in the next coming months?
Yeah, we're just focused on continuing to do what we've been doing, which is to build and support this industry. Obviously, we've had an increase in our pipeline due to market circumstances, and so we're trying to responsibly grow the business. We have hundreds of companies who've come to us to open up bank accounts, and one of the challenges is doing the pre-screening and making sure that they're the types of clients that we want to have at FE Bank. And so we're quite busy on pre-screening potential applicants at the bank. And then we've got really a large pipeline of people who've gone through our extensive application process and are in the queue to get it reviewed by our compliance team. And so I think it's just continuing to do what we can to support the good actors in the space and making sure that we do facilitate them. And we are in business to build and grow and make revenue for our shareholders. And so we want to take advantage of those growth opportunities. We're also kind of at the last phase of launching our digital asset custody service. And so that's really important thing for us to get to market. And we think that really creates something that differentiates us even more from just being a good bank for the transactional market. It's becoming someone who understands and can manage digital assets from a custodial perspective. That's an exciting thing. We've been working on it for quite some time, taking our time to roll it out, and we're getting ready to roll that out, over the next few months. We also have a much awaited Visa cards that we're going to be bringing to the market. And so over the last year, you've seen the loss of essentially what is last mile access to value in digital assets through Visa cards. And we think we're really well positioned as a bank and a digital asset custodian, also a principal member of Visa, we're really well positioned to provide a robust product to the market that's frankly, service providers have left due to various reasons. Now we're well positioned to fill that role.
Yeah, no, it really goes in line with the next question I have, which is for both of you, actually, based on current trends in the market. I'd love to hear, with the rise in digital assets and that demand, what does it look like? How is this likely to impact the banking and finance industry in the coming years? What are your thoughts there?
So, I think you're going to see continued integration of digital asset services into banking. An example is the integration that we did last fall with USDC and enabling people to use USDC effectively as a payment rail. And that's how we look at it. We don't look at it as a cryptocurrency or digital asset per se. We look at it as a settlement rail, like you would look at ACH or you look at FedWire. It's a way for us to transport funds from one party to another. But we've taken a really different approach. We've integrated it into our compliance function. So, for example, at FB Bank, if just like if you were going to send a wire, you have to have a qualified beneficiary. We do sanctions checks on the beneficiary. When it comes to digital asset beneficiaries, we also screen the receiver's address using blockchain analytics tools to make sure that the receiving party would be screened in a very similar way that we would screen an international wire. And so while people may look at it as a stable coin or a cryptocurrency, we look at it as a way to receive deposits and a way to send transfers utilizing the blockchain. And there's certain benefits to that.
Certainly.
Yeah, I'll echo a few of those. And just from thinking back to last fall with the ETH merge happening, that word merge was coming to mind for me in this part of the conversation, just thinking about the traditional banks and the newer digital banks that are coming into the market. I really don't see a path forward where these services don't really get merged into the kind of crypto native side of the business, where sFOX has historically set. And we think that we as a firm are really well positioned to be a really good support network for those first movers and middle movers in this market that are looking to supplement their traditional banking services and banking rails to do those types of things. So I'm very excited for this trend, merging the digital assets and the traditional financial system. And I think that obviously we all kind of agree that we're toward the beginning of this, but I don't see this being a short-lived or a small trend. I think it's going to be something that you're going to have to participate in the coming years to be relevant. And just to offer, Miles, you give a good example with USDC. I'm sure you have a global client base, and the fact is, having a 2-day settlement time with an international wire, it's just not going to cut it anymore for a lot of clients that have real-time needs, and the tools do exist today to have minutes of settlement for these types of things, and still operate with low fees and high uptime and reliability and the credibility that you need to support a product like this at a bank like FV. So
yeah, it's all about giving the customer options. They can choose to send a wire if that's what works best for them and their beneficiaries, or they can choose to send USDC in this example. And we really think of the combining of these two industries as a Venn diagram, right? There's things that will always remain banking, in my view. It is centralized, highly regulated business, and there are certain protections that need to be respected appropriately. So, and there's certain elements of blockchain that will never make it into the banking sector. They just they don't work, or the people who are creating them don't want them to work. And so I look at it as a Venn diagram. There's some intersection where we can leverage the technology and the capabilities and still bring it into the regulated environment that we work into. And so we'll try to focus on that part of that Venn diagram that works for us to integrate the two. And we'll respect that some parts of the blockchain industry will never be compatible with banking.
Well, and Miles, to that point, there's a lot of different shapes of Venn diagrams, and I think the shape of this one that there is going to be overlap in is it's a pretty substantial piece of it. There's store of value, there's payments, there's obviously going to be fringe things that are just never a good fit from a product or security standpoint, but it's a good bit of overlap. Yeah,
I think that'll change over time, right? So, but today we we take this approach where we integrate what we can, and then I think over time, it'll be, as regulation becomes clear, I think that we'll be able to, and we as an industry will see increased integration.
Yeah, that's definitely something that we continue to see and that we're definitely looking towards. Daniel, I would be curious to learn a little bit more on, with regards to traditional finance space, what does that look like, right? sFOX isn't necessarily a bank. How do they work with this space in between the two?
Yeah, sure, Sarah. And you may have a Wi-Fi issue coming on, but I think I got the gist of your question, and how sFOX sits between the two areas of finance. Yeah, I mean, we really see ourselves, obviously, sFOX, we're a crypto native company, right? We're a remote first company. We're crypto native. We kind of sit sort of at the vanguard of that industry. And we really see ourselves as offering, the tools and services for traditional financial institutions to get a really solid, consistent, reliable way to access the crypto markets. With a U.S. company that's sought to be regulated, we hold a public trust company in the state of Wyoming that's regulated by the Division of Banking there locally. And, where we can be regulated, we've sought that out and chosen to be. We were actually the first, digital native public trust company that was granted there in the state of Wyoming. So, these are things we're very proud of, and I think we'll continue to do, is seek out that regulation where we can, for the areas in the industry where it's settled, and really just provide the products and services to help people like FV to service their clients in the ways that they need to, whether that's execution and trading functionality, whether it's custody, whether it's payments, or any of the above, right?
Yeah, no, that's a great context there to the question. I'm curious to learn a little bit more, diving a little deeper into how are digital banks collaborating with partners to enhance their offerings?
Yeah, I'll take that one because it's pretty clear the relationship that we've established with sFOX and the purpose of it. So it really starts for us in understanding how we're regulated and what we're capable of doing. So we're regulated as a bank and as a digital asset custodian, but we're not regulated as a broker. We're not a broker dealer, and so we need a partner to be the prime broker in the equation. As part of our license, when we custody digital assets for somebody, we have a safekeeping obligation, and we take instruction from the customer what they want us to do with those assets. And so the role that we play if a customer wants to liquidate an asset is that we act as a settlement agent. So they give us instructions that they want to, for example, sell a Bitcoin. As the custodian of those assets, we carry out those instructions with a prime broker like sFOX, and we ensure settlement of the funds. So we make sure that the digital assets get delivered to the party that is either sending or receiving them, and we make sure that the fiat funds get settled in the right direction. So our role is really that of a settlement agent in the transaction, and it is required by our license that we work with an exchange, prime broker, or a prime broker. And so it's the perfect kind of a relationship where sFOX can perform price discovery, they have liquidity, and they have the ability to act as that prime broker for us in order to facilitate our client needs.
Yeah, I'll just tack on a couple of points there. I think one thing is one of the nice things about how firms like FV can work. Some FIs are building their own custody solutions, right? And some are building, mixing and matching parts of custody, execution, payments, all those types of things. The beauty of working with someone like sFOX is that you don't have to necessarily do everything. If you just want execution and settlement, we can do that piece. Or if you just want custody with less execution and trading, we can do that. So we really do have a pretty flexible offering for that type of thing. And yeah, we're more than happy to work with people on creative solutions to solving these, because there are a lot of really nuanced workflow and cash management and coin management types of issues that come up here. I think banks in particular are very well suited for addressing these types of nuances, just because of the fact that they're not necessarily having to rely on a third-party bank for servicing clients. It's their own clients. It's within their own ecosystem. So that does open up a lot of creative solutions for us to, have flexible settlement or other types of, sort of bespoke solutions for these types of things.
And just going a little bit deeper on that, before we move into some of the rapid fire Q&A that we have, what are the benefits, I guess, of a digital bank using a service like sFOX? You mentioned a few already, more towards FE Bank, but anything else you might want to add?
Yeah, a couple I will add, and I'd love to hear your input on this as well, Miles. But from the way I see it, banking is complicated enough without you having to worry about the security of your coins or the counterparty risk that you're dealing with. So the goal that we try to accomplish is to simplify that for you, right? So you have a single counterparty, a single workflow. If you're using us for custody, a very simple workflow for those types of things. There's an operational overhead, some level of overhead that's going to be associated, but we really try to keep that as low as possible, and have some really good products in the way that you access the market that make that kind of a low overhead solution. Also, we have a lot of different ways that you can access the market. We have RFQ pricing. We have pricing with just the order book and then added on a fee. We have spread-based pricing. So we have a lot of different ways that you can show pricing and markets to your end clients to suit your needs. And you also have a lot of tools for monetizing that as well for us and for you. So.
I think for us, kind of the value proposition is to offer our customers an experience that they don't know the heavy lifting that we do. We have a complex business to run as a bank. We have a complex business to run as a digital asset custodian. And we have a complex business to run as being a settlement agent in a transaction for them. And so our goal is to really make that seem like it's easy, right? So as a customer, we want them to just be able to log into their account or to use our APIs and to run their business. And so for us, it's to make the experience, as seamless as possible. In particular, we think that the value proposition that we have is going to fundamentally change the market, because today, if you own digital assets and you have it at a third-party custodian and you decide you want to liquidate your position, you typically have to move those assets over to a broker or an exchange or a liquidity provider. So you have this, security risk of sending your tokens from party A to party B. Then that party has to execute the trade for you. So you have that counterparty risk, let's say, from them, receiving your assets and liquidating them. And then you have settlement risk, which is, getting the fiat funds to your bank and hoping your bank doesn't reject them, or timing of that transaction can be impacted. And so the experience that we offer at FB Bank is that you can manage your enterprise banking with us, you can manage your digital assets with us, and when the time comes that you need to perform settlement, we can handle it all, in a controlled environment. So we think that there's going to be a lot of interest, especially from people who have a fiduciary responsibility over the assets. The fact that we reduce the security risk, we reduce the counterparty risk, and we reduce settlement risk by dealing with a single regulated party. And that's where, behind the scenes, sFOX being a partner becomes important, because we can carry out kind of a whole life cycle for our customer and make it a seamless and a more convenient transaction. Yeah.
Miles, the word that comes to mind for me is leverage, not financial leverage, but operating leverage, right? So that you can efficiently scale your business without having to scale your team as much as you would otherwise need to, or your processes or your tech stack, and really building that out through trusted partners like sFOX.
Yeah, no, this has already been such a great session, and I'm starting to see some different questions come in. If you are on this webinar live, feel free to continue submitting questions. We'll try to get to as many as we can before wrapping up with a final fun question towards the end. But I think we will, because we have so many, we'll start off with a couple of more rapid fire-esque questions from the audience. One of the first ones is around the future in the sense of, will banks provide direct access to digital currencies? We already are seeing on-off ramp capability with USDC, but I'd love to hear from both of you on what does that look like? Are we going to be able to just go to any bank someday and not necessarily need to keep our crypto and fiat separate?
Well, you can come to FE Bank today and you can have a good portion of that experience. We support, I would say, in the range of the top 10 cryptocurrencies by market cap from a custodial perspective. We support USDC as an on-ramp and off-ramp. And so, while it's still early days for us, I think that you will see other financial institutions follow. In a way, hopefully we're setting an example of how it can be done and that other financial institutions will join. There are other good financial institutions outside of the United States who are, arguably ahead of us in this journey. And so I do think we're going to see a path where digital assets and fiat banking and other types of activities really seamlessly integrate. It goes back to that Venn diagram discussion as the crossover section gets bigger and bigger, it'll just be commonplace for us to interact with digital assets and fiat money in the same banking experience.
Yep. I completely agree, Sarah. There's a couple of things that I think it would be a shame. It would be such in the scale of missed opportunities. This would be one of the biggest missed opportunities that I can imagine. Right. That's it's on the order of, let's make an iPhone, but let's not let it access the internet. It's like, well, it's not going to be that helpful. So I'm definitely in the camp that we will see this convergence and merging happen between the two areas, and it will just, as Mel said, it's going to take time, but I have no doubt that it's going to happen.
Yeah, and I think just we've all seen some of the carnage that happened in the industry over the last 12 months, and I think the fact that you're doing a podcast today with two regulated companies who are trying to create great broader access to these services to the market. I think that that's a sign of where we're going. And I do respect the self-custody. I do respect, the innovation that's going to happen in DeFi markets. But at the same time, to get more of the, the market comfortable, you need to have trusted parties come in, and trusted parties, as we understand them today, are regulated parties who have oversight and have, both federal, state, and other guidelines that they follow. And I think that, that's going to actually help the rest of the industry to grow, as we would all like to see it happen.
Yeah, and there are just things that are fundamentally not possible in the traditional system that can be possible, like a collaborative custody setup, where you, in the future with crypto, you may not need to rely exclusively on a single custodian. You might have 3 of 5 or 7, 7 of 11, or some mixture of these types of things, where that concept just isn't possible and is totally foreign to traditional banks. So.
Yeah, that leads me to a great kind of a two-part question from our audience. We have a couple of questions that came in around custody. One, kind of understanding, does FE Bank or even sFOX directly compete with other digital asset custodians? What does that look like? But then also, maybe more importantly and interesting, what's the future with crypto custody? What's going on? We've definitely seen, obviously, full solutions from self-custody to obviously regulated entities having a more of a full service custody solution, but I'd love to, it's kind of a two-part to hear about that.
Look, I hope when I take off my CEO hat, I hope that self-custody and DeFi protocols grow, because I think it's great innovation and good things will come out of it. And, I don't have anything against that portion of the industry growing. I think self-custody will play a very important role as we have more of a Web3 world. But I do think that qualified custodians are going to play a very important role, especially at the institutional level. And so I think that we're going to play a very important role. I think the one thing, if I could say anything to the audience, is that understand the difference between self-custody and a qualified custodian. They're quite different, but there's something in between that the market, perpetrated as custody. And that was unlicensed, unqualified people holding your tokens for you and doing whatever the heck they wanted to do with them. That's not custody. And we see where that ends. And so if you are a consumer out there and you're looking for options, you should understand that you can self-custody your digital assets. There are good options out there, or you can work with a qualified custodian. who has, security, regulatory, and, and personnel resources in order to protect your assets. But I don't see the future of that one in the middle, which is fake custody. I just don't see that happening in the future.
Yeah, we definitely, I think many saw that, thinking that just keeping their assets on an exchange means that they must be safe. The companies are large, they have nothing to worry about. And it is so crucial and important to do your research. Don't just trust any exchange and assume that it is like a bank. In crypto, there's not the equivalent of FDIC insurance. So it is something that is very important. And maybe Daniel, you have more to add on that.
Sarah, you're not just going to write a check to people if they need? Okay. Yeah, I just from the first part of the question about, do we consider sFOX to be, complementary or competitive to other custodians? We have a lot of clients that custody with sFOX and our safe product, but we also have a lot of clients who custody with other outside custodians, and we're happy to have both. I think this highlights a point of one of our product features, which is really fantastic, that gives, for this conversation, it's relevant for how banks can interact, but also with, funds and other types of clients that we operate with. It's just flexible settlement, right? So, imagine it's a weekend and you can't send a wire and you want to, buy some Bitcoin. How do you get your dollars on the platform to buy? Well, through a flexible settlement or a post-trade settlement type product that is, selectively available to certain clients. We can offer that type of thing. So, or even if you're not custodying all of your assets with sFOX, we can still, get you the real-time efficiency and capital efficiency of being in the market and out of the market when you need to be, to allow you to settle on your timeline or your custodian's timeline for whenever they can, process these types of things. And as far as the future goes, yeah, I think that we are going to see, definitely more qualified custodians, rising to the top. We're going to see more kind of tri-party or collaborative custody type of solutions. And also I think we've seen a lot of really interesting self-custody improvements recently, a few that are really exciting, coming through the market with Fedi and Fediment, and some more, kind of shared access between participants in a common, UTXO model. So there's a lot of developments. There seems to always be a lot of developments, which I think is true. But even in the custody space, there have been a lot of developments in the last 6 months that are really, sort of groundbreaking from the capabilities that just weren't possible before. So there's continuous development for sure.
Yeah, definitely. I think it's something that custody has always been in the background, at least in my own crypto career. Starting in 2014, it was something that was always kind of talked about. Everybody knew that they should be doing something between self-custody or having access to custody, but it's becoming more and more apparent. And I always make the joke that custody is finally becoming cool. It always was cool, but it's definitely getting on the radar now. Even having friends or people who are not from the crypto industry coming to me asking about this is very exciting, because it's something that I think previously they just felt like they could trust. They just were treating crypto exactly as their fiat. So it is exciting to see that. Another question that came in was around the full on-off ramp process. What is that like for a client who uses both sFOX and FV Bank? If one of you would like to kind of take that on and kind of explaining what that process looks like.
Sure, Sarah. Yeah, just to clarify the question a bit, do you think we should take it from, a flow of funds perspective or from a client perspective?
I guess flow of funds maybe would make the most sense. So the on-off ramp process, maybe from the perspective of a client that is maybe using sFOX versus, and then we can also share on FV Bank as well.
Sure. Yeah, I mean, I'll actually answer it both ways. I mean, take an existing client of sFOX. It's a very simple workflow from a cash perspective. So you're buying Bitcoin. You would just send sFOX a wire. You buy your Bitcoin, and then it's up to you whether you hold that in custody with us or withdraw it to another custodian or a self-custody wallet. One of the benefits that we have being a prime broker is essentially instant settlement. So you can buy And your order might be smart routed across, 10 to 20 different venues. But from your perspective, you can withdraw that instantly, from the service and essentially have settlement in real time, regardless of where your order was actually filled. So there are a lot of benefits that you would get from that, and just the pricing improvement. From a client perspective, we have dedicated support and success teams, in the US and globally. We take a really white glove approach to working with all of our clients, especially people that are doing, in-depth integrations with us, and particularly people who have downstream end clients who, their experience needs to be really streamlined and flawless. So we take a very hands-on approach, and would love to work with anyone on thinking through how that workflow could go for them as a client.
Yeah, so for us, we support a number of different on and off ramp scenarios. And I think, just to tee off of what Daniel said, is that he used the reference wire a few times. Fiat is a very important component to the crypto institutional trading, right? So the number one traded pair is still against the US dollar, as is, most equities and commodities around the world. The dollar is the king trading pair. And so it's very important to have a bank partner who has the risk appetite to manage relationships across digital asset trading. We obviously do that at FB Bank. We also have a product called FBNet, which is our intrabank settlement system that allows our clients to settle with each other intrabank. So that can be utilized as well, where you have a buyer and a seller who are both a client of FB Bank. So we try to focus mostly on the needs of the institutional customer. We do support some business to business and some retail activity for on and off ramps. The needs are relatively the same. And we make those available over our portal or over our APIs where customers can manage those relationships. But I don't see a future, at least in the near term, where the main trading pair in crypto is not the US dollar. And so
I just think it's interesting, just the concept that the most widely traded pair, obviously it's still Bitcoin USD, but it's conceivable at some point in the future it could be a stable coin denominated pair, right? And just the fact that that's possible, it kind of really says something about where the future might go.
Certainly. Another fun question that we've got from the audience, and I think this might be the last audience question. We have one more question that we have before we wrap things up, but it's for Miles on, what made you decide to get into digital banking? What's the story there?
Yeah, so we don't have enough time left in the podcast to tell the whole story, but I've been a payments innovator my whole career. So before really people threw the word fintech around, and I've been building products that are, what I would consider innovative, many patents issued in my name over the years. And, in 2013, we launched the first ever crypto-linked debit cards, and it grew to a large scale operation. One thing that we always ran into as banking partners, because the reality is that no matter how innovative your product, whether it's blockchain or fintech driven, you need banking partners, and banking partners are regulated, and banking partners have compliance functions. And traditionally banks have had technology barriers. And so we were no different. We experienced lots of challenges in having technology relationships with banks and having those banks understand, what our business model was and what the risks were. And so we basically said, next time we want to own the bank and create an ecosystem where people understand, the first is starting is just like building a risk profile and a risk appetite and a context as to what the risks are in the business. And so we wanted to start out, with a regulated entity that had a compliance function that understood the industry and a technology stack that supported it. And again, it was really out of need of understanding that if you're going to be a fintech or a blockchain innovator, you're going to need a bank, and you should, hopefully work with a bank who understands what you do. In many prior podcasts, I've given the analogy of, if you're a bank that supports the agricultural industry, you understand farming, you understand the value of a tractor, you understand ROI on a new barn, you just, that's your business, and you understand how to underwrite that business. We understand how to underwrite fintech and blockchain business and understand how to underwrite that risk. And I think, that's what really drove us to get into this space, was to be an enabler for people who want to develop in this space, but they need a strong partner.
Well, Miles, I'm glad you told us before that it was fintech ventures, not farming ventures, because that'd be a letdown for us.
I have no idea how to manage the risk in that space. That's for sure.
Yeah, that's great. As we look towards the future of the industry, this is kind of our last wrap-up question here. What are some of the most exciting opportunities for digital banks, assets, exchanges to innovate and grow in the coming years?
I think for us is that if we build a good foundation, so if we have a great product, which is that regulatory compliance and technology stack, I'm just excited to see what customers will create with it, because there's there's people that are more innovative and more creative than we are. And so, this is kind of one of the first times in my career where I want to be in the picks and shovels business, and I want to give people a good foundation. But there are plenty of innovators out there who will take our capabilities and make new products that serve, maybe they're going to serve underserved markets, maybe they're going to serve, high net worth markets. I mean, there'll be people who come in and create, or maybe they'll mash up our capabilities with something we don't even contemplate yet. And so I think that's the exciting part, is what will people create in the future that is some mashup of the capabilities you would get from a bank and a digital asset custodian and a prime broker. And if you take those kind of organic products, and then someone comes along and creates something new. And I think that's exciting, is like, what are the innovators going to create, and how can we help them to do it in a proper way?
Yeah. Well, I love that theme of, innovation and then time to market, right? When you're building, something like FV or something like sFOX, there's a lot of groundwork that goes in. But one of the products that we're really excited about here at sFOX is our Connect product, right? So this is an API-based, connectivity for downstream partners to utilize, that they can just utilize sFOX's compliance stack, our smart order router, our custody solution. Everything that you can do on your account can be done by API, and you can just tie into that when you're getting ready to launch your new product or service, or if you're an existing, person like a bank or an FI or a brokerage or an advisor, and you want to just layer in, a custody or a crypto side to your business, you can utilize this product, sFOX Connect, for that integration. It's really seamless, and it kind of allows you to leverage the foundation that we've built to get to market quicker, and then test these things out and see where you want to drive your business going forward. So yeah, there's a lot of very good things to be excited about, both internally to our companies and in the industry. And excited to see what happens.
Yeah, we definitely covered a lot today. This is something that we do these monthly, and each month it's something different. This one, I feel like I've learned so much, and it's been a real pleasure to have both Miles and Daniel on today to be here and helping us understand a little bit more about the landscape with digital banks and how it pertains to working with prime brokerages, and what we see for the future of custody as well. But thank you so much to Miles and Daniel.
Thanks, Sarah. Great to see you, Miles. Thanks, everyone.
All right. Have a great day, everyone.